Hello, today is February 10th, 2024. As always, we'll start with our disclaimer. We'll go over our calls, we'll make some predictions. Also, we've broken through the 5,000 cash level, so I want to do an analysis of the long-term picture. Well, this is my trading plan for Monday, which is February 12th. 2024. Please remember I can be completely wrong, and any trade you make should be made at your own risk. I was away from the market all of last week, made hardly any trades at all. So the market always knows when I'm away. But let's go over what calls being made. We had Friday as a pattern with the early high, which it was. Monday should also have the early high. I gave a number of reasons for saying we had a perfect setup for gapping down and said the call could fail. Here's what we said. These are the patterns we'll see next week. Well, according to my rule, if we gap sharply in the undesired direction, the call's kill before the open. That's what happened. The call was killed before the open. Let's see how it changed things. First of all, we gapped up, hit a higher high, and closed under midday highs. Now that's a negative pattern if it's maintained. If we gap over this, or gap and take this high out early, all is forgiven, but otherwise it's a negative pattern. MEJT also left some targets behind. 95% chance we see 5,017.87. 95 isn't 100, and if it doesn't print Monday, we'll forget it, but the odds are good. We're going to see this level. Ultimately, we should see 5,006.81. Doesn't have to happen soon, but it usually does, and I get about one failure every 3 years with this indicator, so the odds are pretty good. We're not going to just be off to the races here. We're going to see this level too. Early on, we got an ultimate sell signal. That hasn't played out. The target's 5,681. We did get a MEJT buy signal, but printed the minimum target immediately in the afternoon. And optionally, we should trade under this line. So MEJT just isn't impressed by this. Here's the weekly chart. We're still within the range of combo sell signal from Tom DeMark. Now, when these things fail, they can fail big, but we're still within the range of the signal. This is the monthly chart with DeMark indicators. The green target is his stop loss for the combo sell. We're past it, but it's based on month-end prices, so it hasn't been violated. But if it's going to work, we're going to pull back within these green lines. We're also within the stop-loss range on the sequential sell. Again, it's based on the monthly close, but it implies we don't have a heck of a lot more to go if this works. Now, I've had a long-standing target of 5,087 for this move. We came within about 1% of that today, so we have to reassess the situation. The idea was that because this low was the Fibonacci target of this consolidation within 14 points, that the presumed high would also be a Fibonacci target of this consolidation within 14 points. That's where we get 5,087. But look what happens if we draw a Fibonacci grid from this low to Friday's high. You can see great Fibonacci hits on the same consolidation. We have this hit, we have this hit, we have this hit. I mean, it isn't much of a stretch to say that Friday's high was also a target of the same consolidation. Maybe there's something to that. Now here's our wave count. We've completed a giant ABC, but it's possible now to count this as 5 waves up. I mean, here are your FEBs. They all work. We never broke this important trend line, and we're now essentially at a very important Gann fan line. Let's take today's high, Friday's high, go all the way back to the 2020 low. That is a 2 by 1 Gann fan line within 2 points. That's a major Gann resistance area. It goes back 4 years. And we rallied to it, but not through it. And the rule is either you gap over that line or the line wins. If we can't gap over this high, Friday's high, there's a good chance that line's going to hold for a pullback. And when you look at these 5 waves up at a smaller time frame, you can see that even the 5th wave, the FEBs balance out. I mean, this is a very plausible candidate for the end of the move. Of this leg anyway. I still think we're going higher. Well, Monday's pattern has the early high. Typically it's a rally day. It's a final hour high, but if you fail, it's a straight line drop. And that could happen. Friday's rally left behind MEJT targets at lower levels. It's about a 95% chance we see 5017.87 Monday, and ultimately we should see 5006.81. The equity-only put-call ratio took a big drop, meaning the usually wrong speculators in options are now bullish, bullish, bullish. We have a Dow theory sell signal that transports rally to a new high and the industrials drop the same day. We gapped up, hit a higher high, but closed under midday highs. Resistance from the Gann fan line. There's a wave count compatible with this leg being done. Bulls need to gap over Friday's high to continue the rally unabated. And if they don't do that, I think we'll see lower prices and perhaps much lower prices before the rally resumes to more all-time highs. Now, trying to call the end of this bull move we've had has not been a rewarding experience, and I'm not going to call it until we see Monday's open. Again, if we gap on top of this, we've gapped over that Gann fan resistance, we've killed the wave count, we've just broken through great resistance. And if it happens, well, I haven't risked any money on it yet. But if on the other hand, if this holds, and we've given a number of reasons why there's justification if it holds, we could have a straight line drop, the end of this wave black one up, and significant downside to come in the next few days to weeks. So this is a critical level at Friday's high. Bulls really need to gap over that, and if we don't, the pattern could be a straight line drop. Nothing's for sure till we see how we open. We'll see how the day plays out, but a lot of things have come together at this high. It's a pattern with the early high, usually a rally day. Failure's a straight line drop, and that's possible. And that's today's call.